Hey everybody, it's Chris and welcome. Good morning. Holy cow. I think this is the earliest I've ever done a YouTube live here. You can see I got about 20 minutes. My kids are going to be waking up, but I woke up this morning, saw the CPI data was released, and went through some of the numbers and just wanted to kind of hop on here for 20 minutes or so and just kind of go through some stuff. I was just blown away by what I saw. I know the Federal Reserve right now is talking about the fact that they're going to keep interest rates low, and I've been of the mindset that they're probably going to do that. They're going to keep interest rates as low as possible for as long as possible. But the reality is we don't know what they're going to do, especially after today's results, right? Because like if you look at the CPI numbers that I'm about to show you, it's kind of astounding. So let me just I want to get into this really quickly. I want to kind of share my screen and get through what is happening in the world of inflation, because let's face it, inflation has a huge impact on our economy. Inflation is gonna impact monetary policy. It's gonna it's gonna impact interest rates. When interest rates go up, prices come down, right? And so what happens, just kind of explain the basics of this, is we have an elastic currency, right? So when inflation is low, the government doesn't mind printing money. They have a target inflation rate of 3%, meaning to them and to monetary policy makers and bankers and whatnot, the 3% range is a healthy range for inflation. And so they've been saying that we've been under 2%. You can see here at this little graph here, the line here, the red line there is really the one that they kind of look at a lot, but the blue one is the main one, which is like all inflation numbers combined. And so you can see that this is the one that matters the most. And you can see, because of COVID, because of monetary policy and printing and stuff, I'm going to go through this. There are some numbers that really jump off the page. And I think we have some stuff to be kind of concerned about here. While I've been in the camp of they're going to manipulate numbers and they're going to keep inflation numbers low, and they have. I mean, if you look at the calculation that they use to calculate inflation today, it's different than it was back in 1979 when they had runaway inflation that was over 13.5%. And so I think I mentioned in a video I did, I don't know, maybe 3-4 weeks ago, there's a guy named Peter Schiff. He did an amazing video on that concept, so I would look up Peter Schiff inflation, phenomenal video on that after this. But when you look at this, the inflation was under 2%, under 1% a little bit here, year over year, and then it scrolls up and it goes, it's still under 2%, and then it went to 2.5%, which looks fine, and then ultimately it's up to 4.2% right now. So it's gone up over 100%. Inflation rates have gone up over 100% since February, year over year this year, right? So like, if you think about that, that's a huge deal. And what I want to do is I want to hop down. I'm going to jump down to page 16, I believe, and kind of get to, I spent this morning just kind of going through this. I woke up and this is just what I do with my time. And so take a look at the numbers here. So this is consumer price index for all urban consumers. Now 93% of America falls into this category, so that's why they use this as the main calculation for everything. But right here, this column right here, April 2020 to April 2021, that's the year over year column. So you can see the last couple months increases month to month to month over the last quarter, right? Or the last, I guess, 4 months, not quarter. You could see it there. But look at the increases here, all the things that they're talking about. Inflation on all these areas. Let's see here, non-durable items, you're talking about being up 11.4%, 12.2%, non-durable items minus or less food, beverages, and apparel, 15.7%. Housing inflation is, this is the interesting one. They take into account rental prices and all that stuff. The part about inflation that's crazy right now is all the monetary policy that they have, the forbearance, the printing of money, the stimulus checks, all these things, it's allowed housing prices to just remain smoking hot, right? I mean, real estate in our area in Phoenix has gone up 17% in the past year. Like that's just an insane number. So when values go up, it's inflation, right? It just that's the definition of it. Now sometimes inflation is good because there's more demand, there's more productivity, there's more production, and sometimes it's bad. And when there's an incongruency between appreciation of costs or inflation of cost, increase of cost, and there's a incongruency with inflation and production and all that stuff, then what happens is we have stagflation because costs go up, production doesn't go up, incomes don't rise, and so what happens is we end up having a crisis. And what I'm seeing here is we're kind of trending that direction. Medical care costs went up 14.9%, no surprise there. Private transportation went up 15.6%. New and used motor vehicles up 9.6%. I saw on here, I don't know where it is, but I think used cars actually went up 12%. It's crazy. Let me see if I can get down here a little more and find, there's an area where there was some gas stuff that was going on. Let's see here. Let me see if I can find this. There's one. This is an interesting chart here. I went through this a little bit. This actually shows right here, it's like the largest, L means large, S means small, and it shows it's the largest increase or smallest increase since a date, right? So it gets out there. And so what I did is I'm looking through here, I'm looking through this column, and I'm looking for the oldest dates, right? Like, because what you want to do is like look for big indicators, big movers that are massive changes to see if there's anything significant that's been moving, because like right here, bang, okay. So 1982, so all items less food and energy. So we've had the biggest increase since 1982, commodities less food and energy commodities. So all items in this, let's see, what section are we in right now? I think we're in non-durable goods. So all items less food and energy, we had the largest increase of inflation since 1982, which is a huge deal. If you've been watching my videos, you know that I've been saying that we're living in a period like it's 1979. Paul Volcker in 1979 raised interest rates, the federal funds rate, from 6% to almost 20%, 19%, almost overnight, right? Like, and he did that because we had inflationary problems, and he had to raise interest rates to pull that back in. And look at this, we are back in that status where we have the largest inflation for non-durable goods minus less food and energy since 1982. Commodities, largest ever, which is crazy to think about. And I'm looking at this, and it's a lot of this though is just the largest since recently. You can see January and February, a lot of these numbers have been going up. So that's actually kind of scary too when you look at the largest increases since January 2021, the largest increase since June 2011. But a lot of these numbers are December 2020, February 2021, 2021, 2021, 2021, 2021, again. And what does that mean when you see the consumer price index increases that they're the largest increases since 2021? Well, what it means is we've been having big jumps on a regular basis, right? So the inflation was kind of not noticeable over the last year because of the fact that the government, everybody was home, everybody was having issues, and there was no velocity of money, while the government was printing so we could live and we could, pay our bills and not have to worry about these things. It was okay, but there was no movement in the economy. And now what's happening is, as people are opening up, as states are opening up and people are getting back out there into the economy and starting to spend money, it's going to cause increases in the cost of everything. So and the cost of everything, it's the velocity of money. The money starts moving, and so then inflation happens, right? So used car and trucks right here, 21%. That's where I just happened to stumble on it when I was scrolling up. So used car and trucks inflation year over year. Used cars and trucks have gone up 21% in cost in the last year. To me, That's a big concern. If you watch back in, oh man, I want to say December, January, I did a video on auto repossessions being up 400%. Well, when auto repossessions go up on new vehicles, what happens? The cost of used cars goes up, right? Because there's a higher demand for the used car market. And so that's just something to take into consideration. Jewelry up 9%. Transportation commodities 9.2% increase. Men's pants and shorts, whatever, 10.4%. Major appliances, laundry equipment, 23.6%, 12.3%. Furniture and bedding, 11.1%. Basically, look at this. This is all the things that cost us to live, right? Where it gets really crazy, guys, is this is the energy inflation right now. I want to just show this. This is just mind-blowing to me how expensive, like everybody that says, you know, I mean, granted, there are things that have happened. We had the deep freeze with the Texas pipeline in Dallas. I have business partners that live there, and it was nasty, I heard. People had a lot of problems. But look at this. Energy inflation prices. We're talking about 25% inflation, 47.9%. That's a 50% increase almost in inflation. Fuel, oil, and other fuels, 28.2%. Propane, kerosene, firewood, 17%. Fuel oil to fuel your house if you live in the Northeast where I'm from originally, buying oil to fuel your home for the winter. Now, granted, we're coming into summer, so hopefully this can get under control, but year over year, you're talking about a 37% increase. Gas for your car, you're talking about, guys, it's almost a 50% increase here. No, 51.9%. Unleaded regular. Unleaded mid-grades, 40%. Premium, 36%. Motor fuels, 22%. Like, this is just absurd. The cost of living between food, between energy. Let's face it, those are a huge component of our quality of life, of our security. If inflation goes up in those areas, we're all going to have issues. I mean, it's going to be nasty. Like, the thing I guess I want to really, see, fresh fruits up 8.3%, oranges, tangerines 6%, citrus fruit 7.8%. These are all areas that hit our pocketbook. Bacon and related products 10.7%. Look at all these. Like uncooked beef steak 6.1%. These are all the things that we're spending money on. So I'm going to sit here and tell you, and I can hear my kids starting to wake up, so I'm going to have to go. But I'm going to sit here and tell you that this 4.2% number is going to get higher. It's way worse than it looks because of the fact that the inflation number calculation, the inflation calculation is way too weighted in areas that don't really impact our lives and not given enough weight on the money that you spend week to week to week to survive and pay your bills and feed your family and get the gas in your car and get to and from work and take your vacations and do stuff of that nature. And so the bottom line is this: is I would really be concerned about inflation right now. Looking at these numbers makes me think about the fact that, like, I'm kind of pivoting right now. I got to do a little more deep dive on this, but I'm kind of pivoting my mindset on the fact that I don't think that they can keep interest rates at all-time low rates much longer. I think there's going to be a lot of pressure to look at increasing interest rates, and what is that going to do to the housing market? I mean, the housing market is overheated. We all know that. And we've all seen what happens if they increase interest rates by 0.25%, 0.5%. The stock market crashes, real estates are going to have a hard time, refinances are going to go away, like opportunity is going to go away. So there's going to be a lot of pressure on the Fed to make a really tough decision. But the reality is, I don't know if they're going to have an option. They're going to have to do something. So anyway, kind of crazy. I would really think about this, how it impacts you. I'm gonna do this here. Let me bang. I would really think about how this impacts you, and I would ultimately, just monetarily speaking, I believe we're coming into a time where it's going to be economically challenging. I don't think it's a secret. I believe that between political uncertainty, I'm not a fan of Joe Biden. I'm not a fan of the Green New Deal and his policies. I think government spending is irresponsible. I think taxes going up, the capital gains taxes that are going up, the income taxes that are going up, inflation, money printing, national debt, unfunded liabilities, the national deficit, all these different things. It's all pressure on a downward economy, and now we've been able to deal with it because we've had low inflation, and the Fed has been able to just print money, and they've been able to say, we don't have an inflation problem, so we could just keep doing it. Well, now they can't keep their head in the sand. They got to address it because inflation is above their target rate significantly, and inflation is actually just doubled significantly. And so this is not anything they're going to be able to ignore. They're going to have to deal with it. And so anyway, I hope that helps. I hope it makes sense. If you found value in this video, hit that like button. If you haven't already, hit the subscribe button. Hit the bell. That way you get notified every single time I launch a new video. And I hope you found value in this. Any questions, comment below. I'll check in with you later in the day. And have a blessed, inspirational day, and we'll talk to you soon. Later.